Good morning. My name is RiniwatySinaga from class of Professor Roy Campbell for Corporate Finance. I'm going to share what I've learned in this class in 2.5 months. In the beginning of class, we've been sharing about the reason why we need to be agile in the disruptions of the technology and the important things to have good mindset in ourselves. In this class, we do the sharing discussion arguments. We learn from the finance use cases. We do the practice for the portfolio management. We do the book review, movie review, and there is a group assignment analysis and presentation. And there is the individual assignment. And the class was very active because we are encouraged to be actively speaking, and it's okay to make mistakes because it's a part of the learning process. So in the corporate finance, first we learn about the financial management. We talking about the objective first, yeah. That the objective of the financial management is to optimize orchestration of the internal and external resources toward the significant and sustainable value creation. In the execution, we'll find some of the theory, drivers, and activities that will help us to manage the financial aspect, such as the 5 pieces essentials from Ramcharan. Those are cash, profit margin, velocity, growth, and customer focus. We also learn about the 6 corporate value. There are the tangible aspects and intangible aspects. We learn about the GCG for the transparency, accountability, responsibility, independency, and fairness. ECG, environment, social government, which will give a lot of benefits to companies, such as the increasing the productivity, the cost reduction, and so on and so forth. We can use the balanced scorecard approach to measure the healthy foundation of our company. And there is triple bottom line, which profit, people, and planet. So in this class, we learn about the 7 group topics. Start with the capital budgeting, analysis of securities, capital structure, dividend policy, corporate restructuring, profit management, and international finance. So we start for the capital budgeting. Capital budgeting is the business evaluation process to assess whether that the project or the company big plan is implemented or not. We talk about the NPV, the net present value. This is the method. The project budget will be calculated based on the potential development of its value in the future. And coming with the IRR, the internal rate of return. This is the method that considers the time in addition to calculating the future value of the money. And followed by the profitability index. So this is the profit ratio. So for every dollar that we spend, and we're also talking about the payback time, payback period. So it's about time to recover the investment. And we are going to analysis of the security. We talk about the strategy investment. There is a passive investing and there is a active investing. In this passive investing, we just follow the market up and down based on the market sentiments. And for the active, there is 3 types of analysis: fundamental analysis, technical analysis, and market investor sentiment. For the fundamental analysis, we do quantitative analysis and qualitative analysis. For the quantitative analysis, we can use macroeconomy or industry trend as a base of our analysis. For the qualitative analysis, We can use the stories behind the numbers or the people behind the story or numbers. And mostly for fundamental analysis, we can use for the long-term investing. And second, for the technical analysis, commonly used for the short term and also the long term. We use some pattern of the data as a base of our analysis. And the third type of active investing is market investor sentiment. This is for the short-term purpose only. So we just do the buy and sell using the good news or the bad news in the market. In this analysis of securities, we also learn about the investment alternative that you don't only do the conventional investment. We can pick some of the alternatives to invest, such as the mutual funds, the government and corporate bonds, that is gold, commodities, properties, publicly listed companies, share of private company, etc. So a lot of new investment alternative in the market nowadays. And the third, for the analysis of securities, we talk about the fraud investment characteristic, tips to avoid the fraud investment by Professor Roy Campbell. There is the sixth element that we need to check, the company, the people, the product, and also the contract or legal things, and the fifth transaction mechanism, how they pay, how much, when, and also the important things, we talk about the logic of this offering. If the offering is too good to be true, so it's never true. So depending our understanding about this subject, we have exercise with 1 billion investment strategy for 6 corporate as part of our group discussion. So that's for the analysis activities. And we go for the capital structure. In this capital structure, I've learned about the long-term sources of fund, which is long-term liability and the equity. We learn about the portfolio theory using the capital asset pricing model. CAPM is a method used to estimate the expected rate of return on investment. CAPM explains the relationship between the expected rate of return and the risk of stock. And we learn also about WACC, the weighted average cost of capital. This is the average rate of the company expect to pay to finance its asset. So in this capital structure, we also learn and explore about the debt ratio, that there is a three possible of the debt ratio, whether debt increasing, flat, or decreasing, as it impact of the structure on firm value. And we learn about the theory of Modigliani and Miller, that the states that the market value of the company is correctly calculated as the present value of its future earnings and its underlying assets, and is independent of its capital structure. And we also learn about the integration of tax effects and financial distress costs. There is a factor that determine optimal capital structure, such as the tax benefits relating to the profitability ratio and the volatility of debt ratio or the cash flow, and so on and so forth. And to understand the capital structure, we need to know about some analysis financial ratio, including understanding the DuPont analysis framework, We use profitability ratio, liquidity ratio, efficiency ratio, leverage ratio, and market ratio. In the market ratio, we talk about dividend yield, earning per share, and dividend per share value. So moving forward to the dividend policy, that in dividend policy, there is a dilemma that should the firm use retained earnings for the financing profitable capital investment or paying dividend to the stockholders? So in dividend policy really involves two decisions actually. How much of the firm earnings should be distributed to the shareholder as dividends, and how much should be retained for the capital investment. In the dividend policy, it's not mandatory that the dividend must be set to the stockholders or shareholders. The factor affecting dividend policy can be fund liquidity, earning stability, debt obligation, cash dividends, and tax. So that's the dividend policy. And we are moving to the corporate restructuring. We talk about the corporate financial distress cycle and the outcome of the financial distress, why we need the restructuring and transformation, and how we do it in the better way, and what's the element that we need to aware of. So we talk a lot of things regarding the how we can improve the status of the corporate, which it is decreased, and the performance tend to be in the bankruptcy phase. So before that, we need to identify the best strategy and provide the execution plan. We can use the BCG portfolio matrix. As we understand, there is a 4 quadrant in this BCG matrix: the dogs, the cascade, problem, children, and star. We name it after we do the mapping for the X and the Y structure of the matrix of BCG. And also we can use the GE McKinsey matrix implication for the analysis tools to redefine the core businesses and our focus in the transformation. And in the corporate restructuring, we need to manage the process in the structure regarding the capital structure, the working capital management, the asset structure, revenue, cost, cash flow, growth, and risk management. And in this corporate restructuring, I also learn about the leverage buyout or LBO. It's when a company's acquisition by another company using a significant amount of borrowed money to meet the cost of the acquisition. So that's for the corporate restructuring, and we move to the fraud risk management, that we learn about the 7 shenanigans, and this is the actions or omission designed to hide or distort the real financial performance or the financial conditions of the company. Why the shenanigans exist, and what type of company are most likely to use shenanigans? So there is a 10 clue to detect shenanigans. We talk about the also the recording revenue too soon, recording bogus revenue, boosting income with one-time gains, shifting current expenses to a later or earlier period, failing to disclose all the liabilities, shifting current income to a later period, shifting the future expenses into the current period. So We also talking about fraud triangle, perceived pressure, perceived opportunity, and rationalization. We also learn about the reason for fraud, such as huge personal debt or losses, lifestyle beyond income capacity, and the others, and how we prevent the fraud, such as we build the employee ethics with the proper SOPs to accommodate the governance process. We can create the whistleblowing program and some of other program that can be encourage the employee to not doing the fraudulent, and we can also incentive the employee to encourage the employee to avoid that the fraud. And we know about four type of the incentive in here: physical, monetary, social, and also moral. And the last topic that we learn in this class is about the international finance. Via movie review, I learned about insider trading, principal agent problems, market, and greed is okay as long as it's for the improvement and the company growth. So it depends of the objective when we talk about the two things. And I think that's all for the mind mapping as one of the individual assignment. I'm closing the video with the pantun. Hari Minggu diajak mancing, jangan lupa pakai baju terbaik. Guys, thank you for watching and don't forget to keep your life. Bye-bye.